Hello, trading is closed on November 5th, 2021. Start with our disclaimer before reviewing today's action. It's my trading plan for Monday, November 8th, and I can be completely wrong, and all trades should be at your own risk. I'm going to be busy all day Monday. I doubt I'll be able to watch the market and probably won't be able to make any video either. If I can, I will. Today's pattern had the early low. Just look at the times, you'll see it was. Monday's pattern's also going to have the early low. Here's what we said. We had all kinds of negative things, but we said all we had to do to vitiate them would be to gap and promptly overtake the high, and that was well within reach. So that's what we did. This actually is not a very healthy pattern. A lot of people think we're just going to go up forever, that this is a big impulse. The overlap shows it's not an impulse. We gapped up, hit a higher high, closed under all the highs, even under the low of the opening 5-minute bar. Going to say the same thing we said yesterday. A lot of negative stuff here. All we have to do to vitiate it is to gap and promptly overtake this high. But unlike yesterday, when I said doing that wouldn't be too hard, right now I think it's going to be quite hard to do that. And if we don't do it, I look for lower prices. During the day, MEJT said this big drop wouldn't stick, that we'd retrace, said these rallies would also retrace, and that's already happened. This is the DeMark combo sell signal, which I note but don't trade off because it's had too many failures. His stop loss is loose, and it's based on the closing price. We have not hit his stop loss yet, and his systems call for the area of a top, not the exact price of a top. It's still in alignment with his combo sell on the monthly chart, which is a major signal in his work. Again, his stuff hasn't worked, but it has led to pauses and advances rather than reversals of them. We've now gone up 15 in the last 17 trading days. I don't think there's very much precedent for that. I read this morning we only had, but it was before the rally, that the rally with so few pullbacks hasn't happened since 1955. I can't go back and check it myself, but it kind of tells you that these sort of things don't go on forever. Doesn't mean they stop now. Well, here's what started the whole thing. This is my inverted diamond on stilts pattern. Here's the left stilt, here's the right stilt. Usually the top is going to be at a Fibonacci target of either one of the legs or from the origin of the left stilt, which is that close and similar point, just because this number is a fib target of that pattern doesn't mean it has to be the only fib target. So that just makes it a candidate. This is the wave count I've been using. I have magenta B ending here. It doesn't break any rules if you end it here because the length of B would be the same. This was my prior count with B ending here. We have an A and a B, and you want wave C to have some relationship Fibonacci-wise to A. But that's not the only way to count it. doesn't, one of these days I'll get this right. It doesn't break any rules. If you call this A and this B and that C, you can then see that C is 38.2% of A. What's interesting is you then have a count for this wave up with an A and the B and the C with great fibs. Now, just because that count works doesn't mean it's the only count, but at least if we do drop from here, there is a count which justifies it. If this is the end of B, you can come back here and take magenta A, and if magenta B ends here, this is one of the places magenta C could end. Now, I don't think it's the end of the rally. This isn't the right time of year to look for it, but at least if this leg ends here, there is Fibonacci balance with the first leg. One of these days I'll get this right. Now, you all know that Norm Winsky's timing signals came in at yesterday's close and today's close. They have a one-day window. So if we top out today, Monday, or even Tuesday, it still works right in the middle of his window. And if you use George Lindsay's low to high methodology, we get a perfect hit on Monday. Now, just because this low to high methodology works doesn't mean it has to work. It just means that if it works, you can explain it. Peter Eliades goes into this on his free YouTube video this week, which I recommend people look at. He's very good. Click like when you look at his video. Now, Monday's pattern, this is my calls for next week's patterns. Monday's pattern has the early low. We could still gap up. Typically, it's a rally day with a final hour high. Early weakness usually follows through in the days to follow, even if the rest of the day rallies. We gapped up, hit a new all-time high, but closed under the opening 5-minute bar. It's very negative. Unless invalidated promptly by overtaking the high, it should lead to lower prices. Now, regardless of what happens Monday, I think we're higher by year end. But a number of signs now point to it could be a sizable correction first. I mentioned this indicator a few times this week. This is one of my favorite indicators, and I found it to be very reliable. NASDAQ McClellan oscillator went over its upper Bollinger Band, reversed back under it, and stayed there for a day. It's been a highly reliable signal for the end of a market leg. Not going to claim it's worked every time in history, but it's been pretty good for me. Norm Winsky has changed in trend dates after the close yesterday and today. They have a one-day window, so the signal's active, and they've been 80% accurate. That isn't 100, but it's not bad. There's a Lindsay low to high timing signal Monday, so a significant high as possible. We have a DeMark combo cell on the daily chart, and that's in alignment with the monthly. The wave count has balanced at today's high. The normal FOMC whipsaw has not played out. The first move is down, and typically that means the next big move is down, and it should be bigger than the move he had in the opposite direction, which was up, and that targets the 45.30s or lower. Now, rallies like this one usually lead to higher prices in the months ahead. The end of the year is not the time to look for a sustained decline. The ideal situation for me would be a very steep decline starting pretty much from Monday's open, followed by a complete recovery and more by year's end. If we don't have the steep decline Monday, that may play out. Frankly, if we're not gapping down steeply Monday, this might not work. We've had decent potential tops before, which haven't worked, but we have a number of sell signals. Could still be invalidated by gapping and taking out this high early, but unlike yesterday, I think that's pretty tough to do. I don't think this is the end of the rally, it's just the wrong time of the year. But if we get the normal Fed whipsaw coming up, could be a very sharp drop first. Rallies like this, nonstop rallies, just don't go this long without a drop of some sort and, quote, panic, unquote, rallies like this where everyone thinks will go up forever and nobody wants to sell, and I see post after post that we never drop. That's the kind of sentiment extreme that can lead to some pretty short-term ugliness if things play out as I'm planning. And again, if we're not down sharply by Monday's open, I would just cross it off the list. But if we do open down Monday, particularly if we gap under this low, we could drop into the 45.30s or more. And if I'm wrong, it should be obvious pretty early and you don't have to risk any money on it. That's today's call.